everybody, it's Chris here from Student Education with the 4 majors and less update for the 10th of 11. How are you guys? I'm just looking at these charts and licking my lips. Okay, what I'm going to do is just keep it simple today, as I did yesterday. I think a lot of people find it quite helpful. CTC is our count the cash system. I still have on the chart. I'm looking at the 4 majors and I'm looking at the daily for each one. Okay, what I've done is I've looked at fib extensions, pivot, and fib retracement areas to give us support and resistance levels, and noticeable areas that price is likely to move to, or in with, or conjunction with over the next couple of days. Let's start with the euro. Okay, a lot of momentum yesterday. That negative candle over there really cancelling out all that indecision that we saw prior to that. A full week of resistance at the 138500. You can quite clearly see there a lot of fib lines meeting at that particular point at 1385 or ish. We got the 50%, the 38.2, and another 38.2. So we got a lot of congestion at that area, and that acting as a clear ceiling level. Relative strength was trading below the 50% line, so ideally we should have seen or wanted to see price moving higher if we were going to see further extensions. On the back end of that 50 period moving average acting as support, that failed to materialize at 138500. Excuse me. And yeah, at 9:30 GMT yesterday morning we saw that move continue to the downside. Our first potential target would have been 1370, primarily because we have a lot of support and resistance. That is confirmed by the two fib extension and retracement lines of 38.2 and the 50% all joining together at that particular area. So that would have been a genuine support and resistance. Price broke through that, cut through, straight through it like butter, headed even further down to our next potential target at 61.8, which has been a prior support and resistance in the past. If I can just show you that, you'll notice exactly what I'm talking about. So if I just zoom that back, there we go. So 23.6 in effect right now. We've had price support at that level, so you can see we do have potential slowdown today. There is a hell of a lot of news out today, guys, which might reflect on the markets today. But if we break through those areas, then we could see potentially 13,400 being our next target. Ultimately, break below those, then we should be looking at 13,1500 as our next target. As things stand at the moment now, things are looking good with further extensions to the downside, and we should just be aware that we are trading, we are finding a bit of support at 23.6, which happens to be the extension from the high that we saw down to the low we saw just before in October, the start of October, and you can see the price is trading at it now. So be aware of that. CTC is below, see the RSI is below 50, CTC is in our favor. We have a red, nice bearish engulfing candle, confirming that price is going to move lower. So all you could do now, you could take a fib extension from there to there to there and drop it and see exactly where our potential targets are likely to be. So we drew that exactly now while I'm on here. Let's have a look and see where price is likely to go to. Well, we have the 61.8, which coincides with the 23.6. Could indicate we could see a slight consolidation as we speak. However, 100% is what we want to see of the initial move, this down move that we saw here, the failure to stay above those areas, and that would take us back down to roughly the bottom end over here, 1325, 13200 mark. So not too far from where we want to be, and it's a lot of clean air after we break through this 23.6 or the 134500 mark on our daily. So take that into consideration, guys. I know there's a lot of lines, but these will dictate price action, as you see, and you can see that these actually fall on price support and resistance. So hesitation there, hesitation there, hesitation. So clearly a hesitation. We are in this hesitation bandwidth, and that if we see price revert, staying in this bandwidth and breaking lower than 23.6% here at the 1345 or 134700 mark, then we could see potentially price still continuing lower. Yesterday's swing has formed a downside trend line, and as long as price is trading on the low end of that, we should be still seeing extensions lower. Next up is sterling. This is a daily. Yet again, I've done a projection from the high here that we saw all the way to the low, and these given lines, and I've also done a low to the high, and that's what these lines are exactly showing that. So we can see quite clearly here at the 159500 price price has found a price support and resistance at this level at the 23.6 and the 50% married quite nicely there, and that Ideally, it would have been your first target yesterday to the downside. Price actually broke through that going into the close of the US session last night. And you can see the Asian session has pulled back, as I mentioned last night to any of you guys who were on the chat. We would see a potential pullback, but if price can still stay below 15.9500, we could see the breakout, pullback, failure, and now a new resistance, and then we'll see a continuation lower. Now the continuation lower, we could see price trading at roughly the 1582 or 8300, or just which is the 38.2 and 38.2 here. So we've got this little consolidation band. You can see there's hesitation in this area here. So we obviously can see price pretty much trading tentatively through these areas. If it is to the downside, then to the downside quite tentatively through here. But once it breaks these levels, then you see further momentum gaining. And you can see here 38.2 would be your first target, second target, the second 38.2, which takes you right into this consolidation area here, and price support and resistance. A break below that would take you to 15,700, which happened to be a very strong support and resistance level previously. And then a break below that would take us to 15,600, and below than that, wow, we've been as far down as 15,3500. That's our long-term support and resistance overall. If I just zoom out on that, you can quite clearly see. Let me just get this down so you can see. There we go, a very strong support and resistance. And this is one that we were testing back in early December and September of last year, August, September of last year. So you can see quite a noticeable drop from where we are now. And with price falling over here, it has now formed a lower swing. Okay, lower swing dictates that we should be looking for further downside movement. You can see quite clearly that if I draw these lines in here, we could potentially see hesitation today, a pullback, and then a continuation lower. Okay, see how price moves within two ranges. So take that on board, and notice the 50% on the RSI is still in play. RSI, the 50%, we're testing it right now, so we could see a bit of hesitation now. There's a lot of news out today, especially for sterling. We have the official bank rate, interest rates announcement. Are we going to see them still sitting at 0.5? They have been for a number of years. I don't see them being changed. If it is going to be changed, then anyway it goes down, and I don't think they'll change it for that. So we got the MPC rate statement as well. A lot of trade balance figures for Canada and US today, and then we have the FOMC meetings. The members, including Mr. Bernanke, speaking this afternoon at 4:45 p.m. GMT. So things could be interesting. You know, when these guys start talking, price action moves, and he'll probably more likely be wanting to figure out what the hell is happening in Euro. Italy, big problem now, huge problem. Berlusconi looks like he's going to be stepping down. Who's going to be filling his place? What are they going to do with their debt issue? That's a massive thing. That's an ongoing issue at the moment now. So this is going to reflect quite closely. So we're going to see further hesitation. We saw Italian bond yields yesterday trading at a high of 7%, guys. The higher that gets, the more likely is we're going to see a default on Italy, because they cannot rein in this debt. The more they're paying so much interest on this debt at the moment now, it's just getting out of hand. I think their GDP was 118% of GDP. So that's nuts, crazy. But anyway, let's trade what's on the chart. The chart is saying to us we've broken a price support and resistance here quite clearly. Okay, noticeable hesitation in this area at 15.9500. We are below that, guys. We're below the institution moving average, so we're negative. What we want to see is consolidation here. If 15.95 can still stick and hold out as now the new resistance, and the RSI dips itself below this, and then we see a continuation lower, then 15.85 or 15.8300 would be our next target, or into this 15.800 area would be our next target, potentially the 50% 50 period moving average for now. US dollar Swiss franc daily, RSI above, CTC above. We have been blue for a number of days. I took a fib retracement area from the low to the high here, and then I took one from the all-time from here to the high to the low that we saw just recently at 8600, and I took one from the all-time high that we've seen way up here to the low, which has given us this 50% line at 95 as our potential overall target. You'll notice that the 38.2 was breached just recently. Price support and resistance. We found support, and price actually bounced on that 23 area. There we go. Look at that, 89,950. Two resistance. We had the 50 and the 38.2 in this area here, and we saw a beautiful bounce to the upside. This dashed line over here is 100% extension of the initial move. So that move here, we had the pullback. That over there is 100% of that. So we're going to see consolidation. If we can get above this area here, then ultimately we're looking at 100% of the initial move as our potential target. And a break above that would look at potentially 94.50 as our next potential target above. We are above in the institution moving average, above all the moving averages. You can see this clean air. They're starting to see a lot of clean air. We want to see 20, 50, and the 200. That's in the case. 50 extending nicely to the upside. Nice bull runs. And we're not getting any change in market sentiment as the high is moving. You can see the previous high over here. A new high is still higher than that one, so it's telling us that market sentiment is really rallying higher. We are seeing a slight squeeze as price is moving higher. That's bound to happen. So we're going to see consolidation under this wicker. You can see the RSI is being squeezed now. We are at this 100% extension. You could see consolidation today. Ideally, we want to see that breach in the next couple of days to see further extensions higher. Otherwise, it's just going to see consolidating. So if you are looking for a trade on this, ideally want to see the higher or this 100% level here being breached at roughly the 0.9160 mark. US dollar, Japanese yen. Jeez, a battle to spit that out. Here again, you could see intervention, and it just pretty much hasn't stuck up. We were hoping that 61.8 was going to actually help this. We were hoping that that price was going to pull back and it could stay above 61.8 fib area before we saw another tackle of the highs. You can see that we have the 61.8 and the 38.2 fib pretty much on top of each other. There again, you can see the 50% below and the 61.8 down the bottom here, all in play. These lines are all mimicking each other, and 38.2 fell to act as a support, and we saw breakout. We're seeing a pullback now. The next potential target will be 77.5, which is the 50%, and the 20% moving average. Failure to find support over there would ideally look at 61.8, which would take us back to these supports and resistance levels previously. Notice RSI is above 50. Okay, we could see further pullbacks to the 50% line. As long as RSI is above the 50, then we're still looking for bullish upside movement. Remember, we have the 50% and the 61 to play. If it breaks below 61.8, then ultimately we're going to see a fade out, and RSI should be back below the 50 and trading lower. That's it, guys. I just wanted to give you a brief look on a daily time frame. Just make a note of all these figures intraday, and then plot and see exactly where price is in conjunction with that as time goes on. Just going back to the euro, we've seen price really moving off, and we are now testing the 23.6% level support area as we speak. Okay, so we could see consolidation in this time frame as we look. If you break below this area, then we're definitely going to see the lows here at 13.150 being targeted next. That's it, guys. Hope you have a fantastic trading day. Keep it simple. Look at the daily. She will dictate what is likely to occur intraday. Guaranteed. It's so important that you guys have a look at the bigger picture, where we're trading in the bigger picture, and then plot that in your intraday trading. Keep your money management really, really, really strict, especially with a lot of volatility. Make sure that you're trading correct money management rules. You don't want to over leverage, guys. I've seen a lot of people blow their accounts when they don't follow the simple rules of money management. Very, very, very important. You might have the best strategy template in the world, but if you don't back it up with sound money management, it's worth nothing. Have a fantastic day and trade serenely.